Hello everyone and welcome to yet another video of GGA Management Consultants. What we are going to showcase you today. Today we are going to speak about record to report. So this is our third presentation in the series of capability and training. So we already showcased how O2C as a process and what are the sub-process actually works. What are some of the key KPIs? What are some of the information that CFO wants to know if he is managing if he's looking at the overall health of the O2C process. Then we also showcase that how P2P process looks like, and then what are some of the key KPIs that P2P as a process needs to be managed, and how CFO can ensure that he is having visibility on the health of the procure to pay. Now we are here with another session on the record to report. So unlike procure to pay and order to cash, which is a kind of a transactional process, which is like a process wherein the output of one sub process gives input to the another sub process. This is largely, record to report is bit different because if you look at the way things are happening in record to report, is being data. It's basically a situation wherein we have done all the actions for the financials, which is like receivables and payables. Now all that information is getting recorded, and now what we are going to use, we are going to consume that information to create our financial records, and then we can use that information to report the data to our various stakeholders, including our investors. So record to report is basically a kind of a last step in the value chain before data can be finally shown to the investors. When I say last step, is largely means that all the information coming from various processes like O2C and P2P are getting recorded here, and then data is getting processed there. Intelligence is being applied, accounting rules, accounting engine, accounting standards, all the information that is required for disclosure is being processed there, and then final data is being used as for the reporting mechanism, which can then be consumed by various stakeholders for the different purposes. So what we are going to do here is that in the same fashion, we are going to take this session forward, wherein we are going to showcase a quick overview on the various sub processes of the R2R. What are the some of the key KPIs which needs to be measured at each of the sub process level, and what is it that the CFO has to look into to ensure whether this accounting engine or the accounting data transaction engine is working fine. So let's just move ahead and see what we have then. Okay, so let's just have a look. So we have 8 zones. So I think in O2C and P2P, in both we have 5 zones. 5 zones were like largely transactional zones, and then we have the value enablement zone. Then we have zone wherein strategic decisions were taken. Then we have a strategic zone itself, and then finally we have at the tip of the Z curve, which is the analytics zone. So here it is a bit different because as I mentioned that it is a kind of a process wherein we are processing data. So we have data with us now because data has been recorded through various sub ledgers. So we have AR ledger, sub ledger, AP sub ledger. We have fixed assets, and then we have the inventory sub ledger. So there are multiple sub ledger within the accounting system. So information from all these sub ledgers are now available, right? Now we have to use and consume that information. And before using and consuming that information, that needs to be formatted, assimilated, looked into, and some reconciliation has to be done before a final adjustments entry can be passed, and then we are having a final trial balance, and then we are using that trial balance to create our financial statements like balance sheet, profit and loss account, and then a statement of equity. So all these information is being created here. So let's just move ahead. So 8 zone is one thing. Then we have key KPIs, and finally the CFO dashboard. Okay, now we'll just move to the first zone then. So instead of naming each of these zone, what we have done here, we have bifurcated the entire R2R process into zones basis the key activities that we need to perform in R2R. So let's just start and see that how they are categorized here. So we are saying there is zone 1, which is pre-close zone. Now what is this pre-close zone? Okay, so what we are saying here, data collection and validation. Okay, now as I mentioned that we already have a data have data with us. We have data from receivables, we have data from payables, we have data from fixed assets, we have data from intercompany, we have data from inventory. So we have all that information available with us. Now what we have to do, all that information resides in our books of records, right? Which is either our ERP, or if we are not having the ERP, then some accounting system. But largely in the nowadays environment, every organization has the ERP. So all that information is available in our ERP. So we have to collect that data. How did data collection happen? In the form of the various reports that are available, which we can extract from the ERP systems, and we can use that information and do the validation. So validation check as in whether the information that we extracted is correct or not. Is there some formatting required? Some key adjustments here and there. Whether the data is actually reconciled with the subledger or not. So all that information pre-checks is being done in the pre-close activity. When I say pre-close reconciliation is basically the data that we have extracted. We are doing the first-hand reconciliation to ensure whether the base data on which we are going to use our financial statement is reconciled with the accounts or not. For example, if let's say I have downloaded a report which is account analysis report of an expense account. Now, when I downloaded a report, ideally the output of that report should match with my information which is there in my subledger closing balance. And if it is not matching, that means there is some challenges either from the IT issues, there are some interfaces not have run, or there are some other challenges. If let's say I have taken extract of the GL account and then I'm taking the subledger account, and if it is not matching, then there are some entries which are not flown from my subledger to general ledger. So all those kind of the checks and balances are has to be there to make sure that the data which I am using to create my financial statement has been reconciled as a first check before it can be actually consumed. The most important element is the close calendar communication. So which means that once we start our period close activity, we need to have all the sequence of the activity being lined up. Okay, we'll close, let's say, our AP ledger first. We'll then close our, let's say, inventory ledger first. Or let's say AP ledger first, then AR ledger, FA ledger, IC ledger. So all these is sequential manner, right? And then we have to make sure that we have to open the new period. We have to make sure that we have to do some adjustments. So all those activities starting from the day when we are planning to close our books starts from normally typically in the fourth week or the late third week of every month, which means that in let's say 24th, 25th, we have decided that on 24th we are first going to close our inventory, and then 25th we are, let's say, going to close our payable. On 26th we are going to close our AR. 27th we are going to close our intercompany, and let's say on 28th, 29th we'll do the processing, and finally our adjustment center will be passed, and then we'll close the general ledger on, let's say, 30th. I'm taking an example. So the detailing of the activity, so these are like very high level activity. Under that we have so many details. Let's say we have to make sure stock reconciliation is there, we have to show that accruals have been accounted for. So a lot of things are there. So all that information that are required to ensure a successful close are detailed in a close calendar, which is being communicated to all the relevant parties, so they are clear that what they have to provide to ensure that close can be happen smoothly. And that information is also being shared with at the CFO level community, wherein they are also clear that when is the date when they are going to see the published financial. And then check for the GLs in the subledger, most important. So this is to ensure that our balances are tying, and if not, we have to get it, ensure that it should be tying back. Otherwise, we need to pass an adjustment entry, and also we need to find the root cause if the balances are not tying because of the IT challenges or not. So pre-close activities or the pre-close zone is typically a preparatory zone before actual close starts. So we need to make sure that all the due diligence is being done in the pre-close stage, so that we are equipped with all the information that are required for us to proceed with the actual period close. So let's just move to the second zone. So this is a transaction recording and adjustments. Okay. So which means that what is happening in this zone? So journal entry processing. Okay, so we know that when we record the information in our books of records, there are certain adjustment entry or the journals, manual journals that need to be posted. And why those are required is basically because of some regulatory requirement. If let's say somebody is maintaining books of accounts in multiple gaps, somebody, because let's say in India we have to produce this statement in Ind AS, and also if we have if we have like presence in US markets, then we also need to produce the IFRS statements or International Financial Reporting Standard statement. So certain entries are required to do that gap adjustment. Apart from them, some adjustments are required to record some of the errors which are there, some reclassification of the entries from one ledger to another ledger, some errors or rectification entry that needs to be passed because either the accounting has been done incorrectly or it was done correctly, but now the representation of the financial statement demands certain set of adjustments before it can be actually booked into booked to show the financial statement. Likewise, entries for the accruals, adjustments, and allocation. So typically what happens that we need to create the accruals in our books of accounts. So accruals are typically are the charged to our profit and loss for those expenses which for which we have not received the invoice. Uh, Expenses are incurred, but the payment has not been, or let's say invoice has not been received. So we have to make sure that we should account for all those accruals in the books of accounts. The adjustment, as I mentioned, and then allocation. So typically what happens that cost allocation happens at the time of the close, wherein we have, let's say, incurred the expenses on a multiple department or a multiple projects or let's say on a multiple products. So to ensure that each product, each department or each segment should have the accurate profitability, we have to do the cost allocation entries. So all those allocations and adjustments are done once we have the books being available for the close. So we know that in exact position, and then we do the allocation on the basis of allocation percentage that has been agreed. Capitalization and deference. So in the fixed assets, typically what normally entities do, they have to run a deference at the end of the month. They also do the capitalization at the end of the month. So these are two activity. And apart from that, if they have done some retirement of the assets, if they have disposed some asset, so they have to create the fixed asset register. So all that information needs to be done in transaction recording and adjustments. And finally, the inventory and payroll accounting. So any accounting for the my cost of goods sold, any accounting for any inventory adjustment, any accounting entry which trigger on the overall overall value of the inventory needs to be taken. For example, if we want to do some revaluation on the inventory, we have to do some adjustment. All those entry will be done in the transaction recording and adjustments. So typically, once we have assured that our pre-close is okay, we are in a position to do all that adjustments transaction in the accounting. Now, once we have done this, so typically this is in many organizations and in many entities. This zone is also called the this zone is also typically called as the journal entry zones, wherein all the journals are being processed in this. Uh, in a typical ERP scenarios, accounting happens on the go. It's not like we have done an event then and we are manually making that entry in the system. So as and when transaction is happening, entries are getting processed. So manual entry here refers to all the entries which is out of the books and which are largely on account of the fact that these are not recorded in the books because of any other reason. Adjustments, rectification, errors, allocations, reclassification. So all this is being done into the in the second zone. We come to the third zone, which is the reconciliation. So all the reconciliation to ensure that our balances are tied with my ledger. So this is being done in the third zone, and typically this goes hand in hand. It's not like it's being done in a silos. So sub ledger to ledger reconciliation, intercompany reconciliation, fixed asset reconciliation, and suspense and clearing account reconciliation. This is to make sure that our accounting system are accurate. It has been reconciled and a check and balances is there, because this is a step wherein we ensure that the balance that's resided on our GL is tied back with the subledger. And let's say if we are doing some manual adjustment entry, so balance in my subledger plus or minus the adjustment entry which is in my GL should be equal to the closing balance in my GL. And all the information should have backed documentation, so that if somebody wants to look at and figure out that how this amount has been arrived, that should be given and made available to him, and in fact to the auditors as well, when we have that reconciliation documentation being made available. So many organizations also use some reconciliation tool and they also use journal entry tool as well, like Blackline or Cadency. These tools are used to perform these kind of reconciliation. And many ERPs already have some sort of capability already embedded in their ERPs to manage this kind of reconciliation. So subledger reconciliation, intercompany, FA, and the suspense and clearing account. So suspense and clearing account reconciliation is most important because in very ideal scenario, there should be zero balance in the suspense account and clearing account. And if at all there's some balance, it has to be justified with a reason, because otherwise it will have an audit objection. Let's move to the fourth zone, which is intercompany close and consolidation. So again, it is a zone wherein we have done the intercompany billing, intercompany settlement and elimination, group level consolidation, and FX revaluation. So my intercompany billing, my intercompany settlement and elimination, group level consolidation, and the FX evaluation, foreign exchange evaluations. All this is done in my intercompany and close consolidation zone. So these are like first four zone, wherein largely we are dealing with the data to ensure that our accounting records is being stitched for any adjustments, any accruals, any allocation, any intercompany settlement, intercompany adjustment, any reconciliation gap, any gap. If there's a reconciliation back, we need to create a journal entry to manage that reconciliation. So all this is done in these four zones. Now let's just move to the next set of the four zone and see what is here that we need to look at it. Okay, so we have another four zones here. So we discussed about the pre-close zone and all the entries, adjustments, reconciliation being done. So which means that we have a stage being done and completed. Now we are at a stage where we can start the closing. So we have started with the close activities. So what are the activities that we need to do at a close? Okay, so final JE posting. So all the journals that we have created on account of the adjustments, accruals, class reclassification, allocation, those has been looked into, reviewed, and then we are in a position to post those journal in our GL before we can start proceeding over GL close. We close our subledger, make sure that all the entries in the subledger are interfaced to our GL. There is no pending information that lies in my interface table, and because of which my balances should not be because of which my balances can be out. So all that reconciliation needs to be sure before we start the final close activity. Trial balance review analysis. So we extract the trial balance to ensure that we have information being made available in the trial balance. In very likely scenarios, we have a comparable trial balance of the previous month to make sure that our movement from the last month to this month and the difference between the movement is being tracked appropriately and accurately, so that all the entries and every information is being made available, and then we are in a position to consume that trial balance to create our financial statements. And then final GL close. So this is the final GL close. So some companies, they have a concept of the soft close and hard close. So they normally do a soft close to make sure that if at all any adjustment entry still rises post the review of the financial statements by a CFO and the board of directors, that can be recorded here. However, some companies say that everything has to be hard close, everything needs to be done beforehand, in which case the GL hard close happens at a later date. And they only ensure that they have they have strictly said that no entries should be posted. So typically all the final GL close means that the books are closed, and if at all hard close is done, then no entries can be posted in the GL for that particular month. If at all some adjustments happen, that should be off record, and true it's they are called truing entry. Normally we call it true up impacts that needs to be done. So true up impact for all those entry needs to be done in the next month, and we need to carry those entry in a form of an Excel or in a form of a notes to make sure that we have all the information being made available. So this is how a close activities happens. Move to the next zone, which is like reporting and compliance. Now we have closed our books of accounts, we have extracted our trial balance. Now it's time for us to do the reporting, because reporting is the final outcome of the entire activities of the period close. So reporting again has two set of reporting. Is management reporting, which is largely reporting used to ensure that all the management information should be passed on to the stakeholders for their decision making. It can be all form of the reports, which it includes reports in form of the receivables, payables, costing, allocations, variance analysis, all those reports that are required by different set of stakeholders to evaluate their performance that is being shared across. Statutory reporting, including the notes to accounts, which means that we need to prepare the statutory statements of accounts of financial statement as per the in AS or as per the IFRS, and all the disclosure requirements needs to be done. All the notes to accounts needs to be there, and all the relevant information that are required to be disclosed as a part of the reporting standard that needs to be taken care of. Uh, then we have some regulatory compliances. If let's say we have in the telecom industry, we have to file some regulatory requirement to regulatory authority of telecom, and in many cases we have to file some certain set of regulatory information to SEBI if we have a listed company. So all those kind of regulatory compliance plus any kind of information that we need to provide as a part of monthly statement or fortnightly statement that needs to be provided. And then we have a tax reporting, which means that all the tax reporting for the basis for my like output liability on the GST or any kind of the reporting or to the income tax authority for the TDS deducted. So all those filing of the TDS return, GST return, that is something we do. Once we have all that information being made available, we have a trial balance. We have done all the accounting, and then we are in a position to do all that sort of report. Okay, so once we are done with the reporting, the next action item is next item in the end-to-end R2R is audit, control, and governance. This is again one of the most important activity because for R2R, the efficacy and assurance that everything is being recorded correctly, done correctly is bound to various audit. So we have an internal audit, which is largely deal with the process to ensure that the processes that we have in the organization they are working fine and ensuring that there is no leakage on the hard-earned money of these shareholders. Processes are ensuring that our revenue is intact, our expenses are recorded properly, and we have a strict budgetary control. Then we have a stat audit, which is largely audit that was the requirement of the statute for that particular country. This is to ensure that our financial records is being audited by the external auditor to ensure that they are reflecting the true and the fair position of the state of the affairs of the company, and our balance sheet is ensuring that we are going to work as a going concern, which is one of the basic fundamental of accounting. Then we have a SUX audit, which ensures that our governance and controls are managed properly. So, which is normally called the ICFR, internal control for financial reporting. So, SOX audit is being done to ensure that we have all the controls in place and all the controls are managed properly, and they are actually showing its result in the form of the fact that my processes are effective and they are working fine. Then we have to ensure that our policies that we have created that should be properly looked into, properly adhered, and there should be a regular governance to make sure that any deviation, if at all, is being observed, that can be course corrected, and if at all it requires some amendment in the policy, that can be looked into. And then we have the last zone, which speaks about the insights analytics and the continuous improvement, which is like variance diagnostic, foresight alignment, scenario modeling, and the KPIs effectiveness. So variance diagnostic will help us to understand the reasons for the variances. What are those variances? Forecast alignment will help us to understand whether the forecast that we have created has actually, is how to what extent it is matching with the actual output or actual result, and if at all, then definitely we need to look at the mechanism and the scenario modeling so that we can effectively create the forecast. Then scenario modeling help us to evaluate the multiple scenarios, what if analysis, and then finally the KPI effectiveness, which will show that all the KPIs that which is being which are being taken into account to measure the efficiency of the process, they are working fine, and so that my R2R process in itself is working fine. So these are like 8 zones, starting from the pre-close zone to the final zone of insights and analytics. So this typically completes the entire end-to-end cycle of the R2R. Now, what we're going to do, we are going to have a look at all the KPIs at each of sub-process. So how we can ensure that these processes are effectively working or not. So let's just move to the next slide and see all the KPIs for these sub-processes. Okay, so let's just quickly have a look at the set of the KPIs that we need to measure at each of the sub process level to ensure whether our processes are working fine and effectively. Okay, so in pre-close, what we need to look at pre-close checklist completion. So which means that, as I mentioned, that when we create the close calendar, we have certain set of set of activities that we need to do. So likewise, we need to have certain pre-close checklists that we need to ensure that these are adhered, so that our pre-close activities are effective and we can have the successful close. Percentage of data completeness, percentage of subledger ready before cutoff, pre-closure variations, flag raised, and master data accuracy. So all these parameters will help the organization or help the process to come up with any red flag if they have, so that those can be addressed well before the close starts. Okay, transaction recording and adjustment journals. So percentage of manual journals versus automated journals. So nowadays, when we are talking about concept of artificial intelligence, RPAs, and other automation, our endeavor is that how best we can automate our journals. This percentage of manual journals, automated journals tell us that what is the percentage of automation that has been implemented in the organization. Journal's error rate. So if at all we have created the journal but calculations are wrong, that actually add a burden to the entire close process. So that is an fact that if let's say we have 100 journals, our error rate should be 0. And if at all it is more than 0, then we need to have a reason why it is so happening. JE rejection rate percentage to ensure the effectiveness of the journal. Average JE cycle time should be minimal. Percentage of JE posted after cutoff. This should be avoided because any late entries is actually adding a burden to the entire period close cycle itself. Accuracy and accrual accuracy percentage. Percentage of on-time capitalization, depreciation run, cost allocation. So typically, see, entire objective of these KPIs is to ensure that the process that we are managing is, having three major objective to have these KPIs. One is the timeliness of completion. Secondly, the effectiveness, and third, obviously, the efficiency, the accuracy. I would say those three needs to be taken into consideration to make sure that we are, on the track, on the right track when we are managing our R2R as a process. Then we have reconciliation. So what we are saying that reconciliation completion percentage is on time, reconciliation accuracy percentage is recon item greater than 30, greater than 60, greater than 90, suspense clearing account balance and aging, high risk account recon completion, reconciliation automation. So health of the reconciliation is typically being depicted by these set of the KPIs. And if these are favorable, that means we are having the zero risk in our reconciliation, and or which means the risks are minimal, and this is something which is in the materiality limit of the organization. Then close activities itself, day to close period should be minimal. Largely effective organization should close the period within 1 or 2 days post the month end close, calendar month end close, on time close percentage, trial balance accuracy score, and the number of the reopened closed tasks. Intercompany and consolidation. So intercompany mismatch rate should be minimal, which means that we have effective intercompany system so that AR and AP are properly reconciled and there is no mismatch. Netting effectiveness. So which means that's payment by AR, payment which received by received to be by AR, and the payment which received by AP. Those are netted off, and there is like netting of entry being done. Uh, Aging of the unsettled is IC item, on-time submission of the entry, consolidation error percentage should be minimal, percentage of intercompany elimination accuracy that should be highest, FX foreign exchange transaction accuracy percentage should be highest, group close cycle timeline. So basically when we are talking about consolidation, we are talking about the closure at the group level. So each country, each business unit close their books, and then it is being consolidated at group level. Reporting and compliances, forecast versus actual variances percentage, P&L and PS, balance sheet accuracy, on-time filing percentage, audit control and governance, SOX IFC control pass rate, percentage of control operating effectively, average audit query resolution time, most important. So let's say if we have done everything effectively, the resolution time for any audit query should be minimal, and we need to track that. If it are taking more than the align time, that means we are not having data being made available at the right point in time. Then policy compliance score. And then lastly, we have insights and analytics. So percentage of variance explained with the drivers, issue AI AI and RP automation coverage percentage as an overall automation percentage, close process efficiency, cost of finance as a part of the revenue, as a percentage of revenue, forecast versus actual variances, and the P&L and the balance sheet accuracy. So typically, entire health of the organization for the R2R can be evaluated if we effectively measure all these KPIs. So these set of the KPIs are, I would say, the minimum that are required to be tracked. If company wants, if enterprise want, they can have more such of more KPI depending upon their need and the need and the specific regulatory environment in which they are operating, so that they can ensure the effectiveness of their R2R process. Now let's just quickly have a look at the what CFO wants to look at it when he want to evaluate the accuracy, effectiveness, and the timeliness of the R2R process. So next slide speaks about the CFO dashboard. Okay, so let's just quickly have a look at the CFO dashboard. So as a CFO, and if I'm looking at the performance of my close, what would be my intent would be to know. So my intent would be to have a quick look at the close timelines, whether it is being directed to the right direction, whether we are closing the books on time or not. This is very critical. On time close percentage, again, to make sure that, because he's answerable to the board for the presentation of the financial statement, and he can only do that once he has a clear visibility when is my close happening and if it is on track or not. Late adjustment count should be minimal, because this will show the control environment which he has created within the organization. If late adjustments are less, then definitely controls are more, and if it is more, then definitely there is some leakage in the control that needs to be looked into. Sub-ledger close timelines should be agreed and aligned. Supplier risk rating, this will help us to evaluate whether they need to do some adjustment in the risk rating of the supplier to make sure that they are dealing with the right set of the people. And early payment discount capture percentage. This is also one of the important parameters, because as a CFO, he wants to understand whether the suppliers who are offering the discount, are we actually availing the discount or not. And then balance sheet health, balance sheet reconciliation percentage, age reconciliation open item, suspense account aging, and the clearing account health index. P&L and forecast accuracy, EBITDA accuracy percentage, most important. If let's say we have created one EBITDA percentage basis the forecast, how close my actual results are, whether it is same or it is more deviation, and if there deviation, then we need to understand whether our forecasting was done correctly or not, and if not, we need to understand the reason for that variances. Forecast versus actual variances, gross margin variances, driver summary, and the key P&L variance insights. Intercompany consolidation, I see mismatch. Intercompany mismatch. If it is higher side, it's a cause of a concern. Intercompany settlement date should be minimal. Consolidation completion timeline should be as per the agreed timelines, and the elimination and percentage, elimination accuracy percentage. Then controls and the SOX audits, SOX and IFC pass rate, number of the audit findings, compliance score, high risk issue, and how many of them are open and how many of them are closed. And then reporting, management pack timelines, reporting percentage, accuracy percentage, insights quality score, CFO rating, whether the insights that has been generated from the financial statement, that is giving a true and the accurate picture of the financial statement or not. That is one thing that he wants to look at it. And stakeholder compliant index. And then finally, the finance efficiency and automation. How many percentage of my journals are automated? How many percentage of returns am I automated? What is the automation saving in dollars and in hours? And finance cost as a percentage of the total revenue, which is largely the operational cost. And I think that is one of the biggest reason that many companies nowadays want to outsource their entire finance operation to make sure that their cost can be reduced, because when it is being outsourced to the large outsourcing agency, they have the shared resources, and they have a large setup wherein there are many multiple companies, so hence they have arbitrage advantage of cost arbitrage advantage of managing those operation. And this is an added advantage to an organization, whereby they can outsource their entire finance operation and reduce their operations cost. So these are like the quick outcomes which CFO want to track, and to ensure that they are on the track, you want to look at all these KPIs. So with this we have concluded the entire R2R session. So we have completed 3 sessions, O2C, P2P, and R2R, and then we are going to come up with another session, which is the financial planning and analysis, which will then complete the entire finance processes, and we are going to create one compendium of these entire four process, so and has so that an handbook is made available, and whosoever wants to have a look at that handbook, that is available, and he can have a look at that handbook to understand what all these processes are about. So with this, let's just move to the closing slide. Okay, so this is the closing slide. So I would like to thank all my viewers and subscribers for watching this presentation patiently till the end. So it's my sincere request to please share this video with the relevant people whom you feel that they want to understand the process. Please like this video and subscribe our channel. And as a part of our continuous endeavor to make sure that we are providing the learnings and the knowledge to all intended stakeholders, so they are equipped with the understanding of the processes, we are going to come up with more such presentation in coming days. So till then, thank you, goodbye, and have a nice day.